Little echo cancellation going on over here. What is up, everyone? Hope you're well and doing great on this Monday, holiday week, last 2 weeks of 2025. Low liquidity, but a lot of pressure, a lot of that risk pressure taken off after what we deem to be what would be a non-event out of the Bank of Japan with their stimulus printing of the Japanese yen, counteracting the 25 basis point hike. Remains to be seen. So far, that definitely seems to be a potential risk event that has been sidestepped. And you can see over here, yen going as high as 157, and now during this low liquidity here, just slightly off. It's kind of funny though. You're looking at the DXY is down on the day, and the dollar pressure continuing, but at the same time, the yen strengthening against the dollar. But that makes sense after you see that massive move from 154 to 157 right now. Just nothing more than a little bit of price fluctuation. Looking at the calendar this week, we have preliminary GDP numbers coming out tomorrow morning. That would be December 23rd. Then on the calendar, you're looking at Christmas Eve on the 24th, Christmas on the 25th. We'll be here tomorrow together, and then we'll be here on Friday, the 26th, and then continue our following week. I think so. I mean, it seems to me that from my perspective, we had a major potential risk event ahead, and it just was 2 days before the Bank of Japan met that they went ahead and passed the stimulus. Had they not done that, then we could be in more of a risk off environment right now. And during low liquidity, I think that right now we are seem to be in a good position. Now that GDP is expected, the forecast is 3.2%. And GDP now, Atlanta Fed is putting in 3.5%. And whether or not it's 3.2 or 3.5, some people might say, well, is growth slowing? A lot of people were talking about stagflation. You heard that about a year ago into 2025, and that in 2025 we were going to be, and growth we know throughout 2025 because of the acceleration of the AI boom. Some people like David Sachs saying accounts for 50% of GDP, has been, well, elevated. So we're not seeing, as Powell even said going back over a year ago, I'm not seeing the stag nor the inflation. Now he told us that the tariffs were going to be inflationary. All of the PhDs on the payroll of the Federal Reserve, their models suggested that the tariffs were going to be inflationary. We were told by other people, such as the president, that they wouldn't be. And it turns out that they weren't. And it was just recently that the Fed pivoted and said, you know what? We were wrong again. We happened to be wrong. Did you hear the Treasury Secretary Scott Bessent saying over the weekend that the Fed seems to be just a bunch of PhDs on payroll who just have a really poor history of getting anything right? It's hard not to argue that seems to be the case. But the point being here is we're also not seeing the inflation. And we were watching and concerned as we were seeing things like utilities definitely rising and continue to rise, by the way. If you look over here at utilities, they ever since the summer, and a lot of people point to the AI data center buildouts as being a reason for this. I've heard actually other people pointing to the policies of potentially the previous administration. I don't have an opinion because I'm uninformed. I don't know. But we are seeing now, and of course, I'm looking here at trueflation for whatever that's worth, and I don't really know what it's worth. But even we saw last week CPI readings coming down, and it looks like, as my whole hypothesis has been, I don't even know if you call it a hypothesis, my read on the markets has been saying that in 2026, we're going to continue to see the slow motion, like, I don't even call it a repricing. We talked about gold being repriced in real time and almost like a slow motion monetary reset. And this thing though in 2026 is it's not so slow motion. I mean it is, but it isn't. If you've been into Bitcoin and you've seen some, I mean 70% move in 1 year is pretty substantial, especially with the market cap of gold. And we're watching what we call real-time monetary reset taking place. By the way, big shout out here to silver trading at $68.46. Silver has just begun on the monthly time frame to become overbought. Now, just for context and just so you know, has become overbought. Gold, if I could, I'll just go flip back like this over here. And gold over here, gold has been, as judged by the RSI on a monthly time frame, being above 80, has been overbought here since last March. Now February was 78.5 on the verge, over 80 readings since March. So we're coming upon, in the next couple of months, should it remain so, almost 1 year of being overbought. Could you imagine trading an oscillator and every time it's overbought selling and oversold buying? Talk about a recipe to get wrecked. We've always talked about, and it's rare, but sometimes overbought can remain so longer than people could remain solvent and or rational, however you want to view it. And silver has just begun. Well, I don't know if it's just begun or from my estimations, it's just begun. But it's interesting to see it here overbought on the monthly, and knowing that gold leading over here has been overbought here now going on 9-10 months. Um, so we were talking about repricing, and I just kind of went over off on that tangent and jumping back to the inflation. And yeah, this is true inflation, and we know that the way that the official reading of the CPI coming off a little cooler. My expectations into 2026 is that yeah, shelter is going to continue to have a hard time, right? You see a lot of more buyers, more sellers on the market than buyers. The sellers have a price in mind that they would like to be able to sell their house for, and there's no one willing to pay that price at the moment, and they've been taking their house off the market, and they're like, okay, well, I'll try again. Eventually, that some of these houses are going to need to be sold at whatever the actual market price is. Market price is whatever the buyer is willing to buy it at. Now, it is possible, and I think the wild card is, and I don't see it in the cards, but if we were to see something similar play out as we did last cycle, whereas roughly was that 6 months, September to March, uh, 6-7 months between when they start that balance sheet expansion into when a crisis develops. That if they I don't see that happening. That's not in my playbook. Now I do think that there will be a time that they are forced to return to outright QE. That's going to be in a crisis, though, where they have no choice to keep the music playing by go ahead and flooding the system. What I think is happening here, and I'm surprised at the rate here, double last time over here. However, the balance sheet is twice as high. So is it really double, or is it pretty much the same pace? Last time the balance sheet was at 3.7 trillion. Here over here, it's at 6.4, 6.5. It's a little less than twice the size, and the rate therefore is pretty much on pace, and it's just elevated numbers, and that's the trend that will continue into the future. My estimation is that, although Powell said cosmetically they're going to taper this down in April or after April as he leaves, he's like, I'm making sure there's ample liquidity and then I'm out of here. They're expected to bring it down towards 37-38 billion dollars after Powell leaves. Currently, right now, just above 40 billion. So that's not really tapering. I mean, technically it is, and from the mind of a PhD, it might be, but in my book, that's not really there. So let me just finish here the macro, setting up to where we are right now. Then we'll get into our positionings in 1 second. Will silver continue outperforming? Again, we just looked at it's now overbought, and gold has been overbought since Well, last February, and it really depends. You know, is anyway, I look, I don't have a crystal ball whatsoever. I just speaking of not having a crystal ball, I think it was fantastic TA, use of TA that we did over here. As gold began correcting, I said, well, probably the consolidation will last all the way till February, right? And I put out this line. And then as gold started bouncing and then consolidating again, I readjusted this line. I said, well, even though my expectations are this should consolidate further, close above here, and we have to close our eyes. And you can see now gold here since then, 4,200, now trading above 4,400. And it is just here at new all-time highs. And that was extremely well played. Pretty easy. Nothing difficult about it, but it wasn't predicting what's going to happen. It was making sure that we stayed on the right side. I wanted to finish my macro view over here of what's taking place because it's very important as we move into 2026. We're talking about stagflation that hasn't materialized. We're talking about how inflation, as my expectations have been into 2026, that we're going to receive some cover because of shelter, which makes up a third of the CPI basket, continuing to slowly come off. That provides cover. The type of cover it provides, it does allow the Fed to go ahead and align monetary policy by further easing. If the way that they measure CPI and doesn't mean much the way they measure it, and by the way, you can see utilities do continue to rise over here. And that is really what affects the whole bottom portion of the K-shaped economy right now. And of course, someone's utility bill rising 10% is a major, major, major source of suffocation for them. Um, so what I do see though coming in 2026 is GDP coming off right now. Is that a sign of a slowdown or is that a sign of government shutdown? More likely the government shutdown into 2026. I think we continue to see that GDP continuing to rise and more, 4% prints. We see inflation coming off, allowing monetary policy to continue to ease. That's bringing down the Fed funds rate, and that's continuing here this balance sheet expansion that's taking place as the AI build out will continue. And as the AI build out continues, you continue to see that priced into the GDP. And we are looking at what I believe is going to be viewed as a reacceleration into running it hot. I don't see any signs, personally, of a bear market recession into 2026. It seems to be the counterculture, the counter analyst view, but that will change. And when it changes, everyone's going to come off as if they saw it coming the whole time. Bitcoin trading now at $89,200. Let's peek in on the daily time frame over here. And we have a couple of things that we're watching. You saw over here people talking about, well, every time the RSI on the daily is oversold, that means roughly within 80 days, Bitcoin should be projected at $180,000 Bitcoin. And I'm like, well, it really matters which way momentum's going. And if you look at the RSI taking over there, and then you just do simple trend line over here, we have our structure in place. If you get an oversold RSI, price usually comes into consolidation. If it breaks down, that opens up another leg down. I don't think we're out of the woods or even close to it. This green line is what's called a buy impulse if that breaks. However, right above the break of that buy impulse, we have 1, 2, 3 touches into that structural resistance. We need to clear above that line, which is all the way now somewhere around $97,000 in order to open up the door for what would be a lot of room. I see a bunch of room in here into something that's like 107, 108, and that would be back above if you were to trade that high, back above the weekly 50 SMA, and it would have been nothing more than whatever hoopla. Let's look at our positioning right now. So Bitcoin is far from out of the woods right now. Yes, we could say that we've cleared a lot of market hurdles as far as FOMC, as far as CPI, as far as Bank of Japan. It does seem to set up some what would be called Santa Claus rally-esque behavior. Whether or not that's coming into the end of the year, the next couple of weeks, or we continue to muddle along into January and in the first quarter. From my view, it sets up what would be positive fund flows of funds. This week we have GDP, unemployment claims. Next week we have Fed meeting minutes, which is obviously something that's going to be important to see what they're talking about, what they're discussing. When they become irrelevant, that remains to be seen. We know that we have a new Fed chair coming in May, and then we have obviously very important, a lot of jobs numbers start off the first week of January. It's really right here that you're going to see traders coming back to their desk, volume picking up, and to kick that off, we're going to have non-farm payrolls on Friday. JOLTS, ADP is going to give a clearer picture of what's taking place there as far as the job market. Right now, we're looking at the NASDAQ after that repair. Breakout, retest has yet to resume up. It resumes up, and all-time highs are very much well within range. Our expectations has been, now that the Fed begins raising, expanding their balance sheet, yes, it takes this is not outright QE. This takes a moment here. It's like a slow motion inflation of the liquidity out there. We know that last time in 2019, it took several weeks for Bitcoin to finally find its footing. We would like to see tech lead over here. And you know what? The board is set. Everything here suggests that indeed we have the opportunity here for what would be a positive flow of funds. And if we don't see that, well, then that's a bad sign. Then that's a bad sign. So everything is set up that we should see risk begin to rally, led by tech, and then hopefully within by the end of January, Bitcoin find its footing. Let's move over to our positioning over here, and that will be led with what's going on. Well, we'll start with Tesla. Tesla continues to be our only position. People are like, Jordan, you are looking into 2026, and everything that you say is that you're looking for some reacceleration and then into running it hot, and you don't see a bear market. Are you fully positioned and more? No, no, on the contrary. On the contrary, actually, we're just completely hedged when it comes to Bitcoin and crypto. We have over here we have over here the continued short position on Cardano, which is getting close, by the way, here to taking in and locking in some profit. You can see that it's getting very close if we don't have another continuation down. And if it does, that's good, because that would just kind of hedge. Remember, we had the beautiful dance going on. Ethereum short stopped out 3.8% Ethereum. So if that Cardano is able to walk away with some profit, that was just a hedge. And well, not even a hedge. First Ethereum was long, stopped out. Short, stopped out. That's getting chopped up. Hopefully, Cardano is able to give a little bit of reprieve from there and keep us, I'll call it, running steady. Not beautiful dance. Now we're back to being hedged, whereas you're seeing Ethereum now long, while Cardano remains short. Now, right now, 7 hours from now, we're looking at the potential close of that Ethereum trade. Remains to be seen whether or not that's confirmed, whether or not it closes full stop out beforehand, or if it remains to hold. And then as far as, so we're just barely positioned there, hedged on Bitcoin and crypto. On stocks, we're completely sidelined. I don't care what my view is. I only care what is happening, where momentum is. And right now, momentum is just has us in Tesla here, our only position. It continues to remain in profit here, 13% into profit, and everything else is on the sidelines. But we all know how quick and nimble we are. Momentum returns we see NASDAQ able to make that resumption, and then we're moving towards all-time highs. Maybe Bitcoin makes some of those repairs. We see MicroStrategy enter the market now long, and then IBIT, the spot ETF, we could be back into fully positioned off of basically 90% in cash, 88% in cash in a heartbeat. And if that momentum lessens back into cash, that's how quick we move. My priorities is Cabby coming into the end of the year here is right now, obviously, well, in this moment, to be here with all of you. That's important. Spend this time together with the family. I want to work on 2025 recap and make sure that we look at what has transpired over the year, what lessons we could learn, how that's going to translate into 2026. And yes, that is extremely high priority here as we enter 2026 to get the V4 released out. So that's super high priority. Shouldn't be long, right? ST2 is off because bull runs out of the market. Hold on a second. Hold on one second. This is ST2 on over here. I have ST2 off below, right? So David, are you talking about on the bull runs template? Because I track it on this template. Is that my mistake, David? Well, even still. Yes, David, I'm so sorry. You were so right over there, and that's my error. I have this is my first moment here on the screen with you all. That is absolutely my mistake. Thank you for dotting the I's and crossing the T over here. And then this is wrong then? I don't understand. Hold on one second. Maybe I had an error over here with this. Oh. See, I made a mistake over there, David. Thank you for correcting that. That's a big deal. Thank you. Thank you so much. Yep. Thank you for helping me see that over there. I I had made a mistake over here, assuming that I would have this correct because this one is I have the two different scripts, one off on. I had manually as Bitcoin bull runs adjusted that over there. That was my error. I thank you guys for correcting me and getting me on page. Very important over there. Nothing like working together, the hive mind. And that's a big deal over there. Big deal. Big deal. V4, high priority. 2025 recap, high priority. Here together with you all today, tomorrow, high priority as well on Friday. And then throughout all of this, I want to make the time ahead of that return well, I say return, but we'll be having some holiday sessions here next week as well, including on Monday. But I want to make sure to get our 2025 recap and summary out, pushing us forward into 2026. Anything else that we need to cover today? The only thing we need to cover is actually on the Discord alerts. I want to go ahead and depending on what the trade is with Bitcoin bull runs, manually make sure that's the only alert coming through. That's going to help there tremendously. Everyone, for now, enjoy this time. Enjoy this time. Have a beautiful day, everyone. Jose, glad to see you here live today. That brings a big smile to the face. Everyone celebrating and with their family, friends, loved ones, and all of you who are that to me. God bless you. Have a beautiful day, everyone. See you all tomorrow. We'll be back at it together.